All right, B2B bars. I started doing this in the trading room. You guys that are not in the trading room, you should be. Jump in the trading room and be there every morning so you could start seeing this stuff happen. Now, most of you guys already are, but these B2B bars, that's just simply what I called it. In Florida, I was thinking of some, newer ways to explain really what we're trying to do here and really give people a better chance at having light bulb moments for this workshop that we have coming up in late July. Now, people watching this video on recording, we're having a live event in late July. Might be past by the time you watch this, but still a ton of value in what are B2B bars. So, well, they're either bullish to bearish or bearish to bullish bars. Bullish to bearish, bearish to bullish. It's essentially transitional bars that we've done videos and stuff on, but this way to give us a better visual moment. And I always put this image here at the start now of these meetings to keep giving people a sense of where's your overlap. So keep that in mind. Let's move to the next slide. Some notes on B2B bars, and then we'll jump right into a chart and show you. What are they? Well, first of all, this is just the way I'm highlighting. Something simple. What are they? I'm going to throw up my chart. If I open up a 4P&F, and most of you guys, point and figure is the periodicity of choice for Edge members. I think it shows the best rotation you could use. You don't have to use 4. Use point and figure to show rotation. If the market was bearish, let's just say, and it wasn't, we were already into a bullish transition before this pop right there. But let's say we weren't. Let's say we were bearish all into this. You would at some point say, hey, probably above this line, it's a bullish transition, right? Bulls are in the driver's seat. Bulls have the leash. I say both things. So you could simply use something on a vertical, whatever platform you're using, you have a vertical marker you could leave there to highlight that bar to say, this is when you thought the market was transitioning from one side to the other. In this case, from the bears to the bulls. B to B. Get it? Now, with that being said, does it mean that you got to wait till after the bar and when it's way up in here to say that? It's probably too late. You want to be able to be a little quicker than that. This doesn't mean you're going to buy every time you have a bullish bar in that bar or sell every time you have a bearish transitional bar. It's just to get you on the right side from a thinking standpoint, from who's in control. So when you fade, you know you're fading. So when you're going with the short-term trend, you know you're going with the short-term trend. This is a way that your head is moving. If you're watching, this is really how you look at it. If you're looking at a guy following a bird in the sky, you see his head moving because he's following something. So this is going to help you follow something better. If you can't follow something, you can't trade something. So this would be a bullish transitional bar. Now, earlier, and I know this before we left the trading room, halfway through this bar, if you remember, I was hesitant at first, but then I threw it on there as a bullish. This was the B2B bar that made the bears who were in control all through here gave the leash to the bulls. And it was around here in the bar. You have to wait to the end. So the whole point was the bulls were in control and they stayed in control. So this bar never really has to be put there because the bulls, it's not transitioning. Bulls are staying in the driver's seat. Nothing happened in here to give the bulls, to give the bears any credit. So after this transitional B2B bar, we'll call it, was put in, nothing happened inside that yellow rectangle to give the bears any hope. The wheel ended up being followed through right in there after we closed the room soon after 10:30 Central. All right? So when do you place the bar? I'll get into that in a second. We're not going to be too mathematical or mechanical about it. So what are they? Transitional bars. If you noticed throughout this whole Edge program, there are times that the concepts never change, if you notice that. The concepts shouldn't change if they're the right concepts, and they are. The principles will never change, but there's always better ways sometimes to look at the same thing. So this B2B idea is a way we've done transitional moments, I think was the title of a previous video. That's what collaboration does for people. Better ways to look at the same thing. That's what makes it so powerful. When would you change them is our next question. When would you change them? You should have that question in your head after you put one in. All right? So let's say I just put this one in, and before I know any of this stuff, I got to say to myself, I start thinking, if they take out this area, then the Bears are going to have the leash back. If they come down here, the Bears be a long up-down bar will probably have the leash back. So if you see them pepper through there like fast, that's one way to change them. You wouldn't change them, you just add another one. So I should have phrased that better. You're not going to change them, you're just going to add another, right? You're going to transition from this bullish bar to, you would put one in here because it went from bullish to bearish from one bar to the next. And if you get too many of those sequences of a highlighted bar next to each other, it's going to be a choppy trade, and you might get chopped up a little bit. And that's fine, because that's going to happen. So when do you change them? You don't change them, but when, the question should be, when do you add or transition into the next one? You should ask yourself that question after you put one in. So this is a bullish transitional bar. Right here, this is a thin spot. Doesn't highlight red or green, but it is a thin spot. More volume above it and below it. If it sneaks through there quickly, certainly goes down in here, I'd have another bar put in and say now it's transitioned back to the bears. Okay? You don't have to add one right in here because it's already bullish. Like I started this presentation, if indeed we were bearish in here, then you would put one in here and say, hey, bull's got the leash. Are we good so far? Now, this is not easy stuff to novices, but it is easier stuff to many of you, knowing what you know. And it is good stuff because it creates a better visual. Like Peter had said in the room, he wasn't here for when I started doing this. He said, what is that? And some guys in the team room told him, and he liked it. Why? Because, again, anytime you got a better visual of something, you have a better chance of understanding something. So let's go back to the questions. Oh, I didn't put a question mark at the end of this. If you watch them on ancillary markets, does it lead? Does what lead? Does the ancillary market lead? Going from a transitional market sooner than your primary market. Your primary market is the product you're trading at that particular moment. If you're an ES trader, that's your primary market. If you start throwing transitional moments up in the NASDAQ, does it lead? Now, the NASDAQ is slippery, so it's going to have more of them, and you could start really kind of getting yourself confused. So you got to be careful with taking thinner markets. Just make sure you got the right periodicity. I would first do it with the ES and then move over. You're going to have more instances because the NASDAQ is a whipsaw market. It goes from bullish to bearish a lot. The key is not to be long every time you're bullish and short every time you're bearish, or you could overtrade. So let's just take, for example, this bar. At some point early on this bar, probably right in here, I would say this is a bullish transitional bar. And it's hard to put this one as a bearish transitional bar. Why? Because it still has some decent support, and it's holding half of this bar. If it gets below the VWAP, I might have put one on there. So it's still bullish, right? It's still bullish in here, still bullish, still bullish. I mean, even now it's like nothing. I wouldn't say it's a transitional bar yet. Anything in here, to me, wasn't a transitional bar in this NASDAQ market. It's just nothing. And it's midday, it makes sense. If we take this back a little bit, this would be a bullish transitional bar, so you wouldn't even have to put one here because you were already bullish, right? The The market was out here. This is the other thing I wanted to say that, and I started using the wrong terms. The market is bullish. Stop using I am. You are. The market is bullish. So then it doesn't seem like you're wrong. The market is bullish. This is a bullish transitional bar for the market, not for you. Makes it a little less personal. This would be a bearish transitional bar. I don't care how long it stays bearish. Sometimes it'll stay bearish a long time. Sometimes it'll jump like this. As soon as it broke through this rotation, I'd start thinking that the bulls had control. And then as soon as it got through this thin spot here, definitely put this highlight on there. So then you got to see if, well, let's do this again. This is a bullish bar at 10:40 in the morning. So about almost an hour ago, about 45 minutes ago, the NASDAQ seemed to go up first. I don't know if it went up first. But it obviously went into a bullish transition. So then we open up our ES and we say, I bet you that was the same time this bar went up. And what do you know? The ES could have led the NASDAQ. I wasn't watching the market at this moment, but it says 1037. The ES, I don't know, if it broke out first, could have led the NASDAQ up. Now this wasn't a bullish transitional bar because we were already bullish. Remember, you don't have to have rules. Too many rules to this. I'm just saying to you, why would this be a transitional bar up if you're already bullish? There's no transition. You still want to understand where the bears are nervous, and everybody should know that they're nervous above that yellow line I just put in for all the content that you've been studying all these months or years. So you should almost not be surprised that it jumped from this out of this congestion. So this is something I touched on yesterday. I didn't want to elaborate in the trading room. I want to elaborate to you guys first. If your stop is obvious, then you probably shouldn't take the trade. This gets you to start thinking about exits before entries. Over the years, I always get asked, where would your stop be? Where would it stop be? Where would it stop be? It's a good question. If the answer is in a spot that seems to be obvious to you and most of the rest of the world, then it's probably a shitty trade. I don't like to swear a lot. I have to right now. It's probably a bad trade. And the reason why it's probably a bad trade is because I did a video on this. I did a class on this that stops, when there's enough of them, are like magnets. Not maggots, magnets. And I'll show you. Let's go to a black pen color. I'm pretty sure videos were done on why, if there's enough stops in a market, why they would be like a magnet. Let's say price is up here. Follow this black X here, right? And for whatever reason, that for sure you got a collection of all kinds of sell stops. Sell stops are below the market. We should know that, right? Buy stops above, sell stops below. And you say below what? Below where the current price is. Current price is right there, okay? If there's a collection of sell stops, which are all those illustrations of small X's down here, there's a lot of people that have to sell it. They're letting, at this particular moment in time, some mechanical order to sell it for them. But they are sellers. They're either going to sell this thing with their stop, where there's a lot of stops, or they're going to sell it with a resting offer at some point above the market for a profit. Obviously, they all want to sell it above the market as high as possible because you make more money. If you're long, you're a seller. Very first phrase you might have heard when you learned from me. After you buy it, you're a seller. If you sell it, you're a buyer. So if there's a lot of sell stops and they're collected in a small or certain area, all right, of the instrument you're trading, then there's a lot of people that are in a particular room that are looking at each other, waiting for the first guy to go to the exit. Now, they're not necessarily doing that in the market because they don't see that there's a lot of other people. But as you become a better trader, you become better and more aware that there's a lot of stops that this market's going to go after. The reason why the market goes after them is not necessarily some predatory system. It's the market doing what the market has to do in order to exist. It has to shake out the notion of too many longs. Because if there's a lot of sell stops down in here, it's easy to assume, and practical, it's understandable that there's a lot of people long and using that sell stop to exit that trade for a loser. That's why what most people use sell stop for, to exit losing long trades. I don't know about you, but let's just pretend that this black little curly line that I'm drawing in here is the price. And if there is indeed a collection of sell stops in that box below, what do you think the market is feeling when it starts to slip? If I'm long and I'm one of these guys with a sell stop down in here, I'm getting nervous. And I'm maybe just at some point ready to say, screw it, I'm going to sell it. And another guy says, yeah, I'm going to sell it. And sell it, and it's like the pressure brings it down. There are people that have to sell here. Right now, they're letting their sell stop mechanically do it for them, and maybe an OCO of a resting offer above. But where do you think the emotion is? The emotion is tipped to go lower, shake all these guys out, which means trigger the ones that didn't sell it on the way down. Once they clear that all out, a lot of times, wham, they're able to release to the upside. Why? Because all these X's were pulled. If your sell stop gets elected, your resting offer gets yanked. If your resting offer gets yanked, there's less sellers above. If there's less sellers above, it's easier to go up. But the key in this whole story, I'm telling you, is the emotion and the perceptions in here. If there's a lot of sell stops below, there's a lot of sellers above. And that's creating resistance. And the emotion of, it's getting closer. As it gets closer, it gets closer. As it gets closer, it gets closer. It's got to wipe them out. Hopefully people follow that. So going back to obvious sell stops, to me, where's an obvious sell stop in here? Below these two, right? I don't, not that I don't want to get long in this area, but I'm not going to say I'm wrong below here. I got to be wrong. I either got to let this play out and be wrong below it, but I'd rather have a less obvious place where I'm wrong. Because if it's an obvious place where I'm wrong, it's an obvious place where everyone's wrong. And then that whole self-fulfilling prophecy I just explained starts to happen. Makes sense? So this is a very important line that you'll hear me use at the workshop too. If your stop is obvious, then don't take the trade. Let it be something that is kind of hidden, covered, thin spots and stuff like that. Thin spots will never be obvious, by the way. Market delta and the footprint could just exponentially grow with subscribers, and it'll still be something most people never, ever see or understand how to use. So here's an exercise coming out of this meeting. Review your day with them, and when I mean them, the B2B bars, at least to see if you're calling it in a timely manner. Now, every time I create and unveil another exercise, I can't force anyone to do it, and quite frankly, I hope you do it. If you work for me, you do it, or I'd fire you. It's up to you. Just do them as you're trading. I'm doing them. If you worked for me and you didn't do it, I mean, I don't even think I would give someone a second chance. I would say, you're trying to trade my money, trying to learn this business. You don't do an exercise from the guy who tells you, that's teaching you, go become a plumber. I guarantee you they'll have exercises for you to do. So now let me go over my exercise. The exercise isn't just putting these lines in. The exercise is then going back to review how it looked. And I like to study an area like this, where you get a floater in here, we'll call it, where this was bearish, bullish, bearish. This starts to get, to me, and I'm going to work with you guys from it, if you stayed out of these transitions aren't wrong, by the way. This is why it takes the high points, or it takes the edge off, for lack of a better word, no pun intended. It takes the edge off of being wrong. The market was slightly transitional to the down, right? There's nothing wrong with these bars. They're not wrong when you start reading a market correctly. They're not wrong. This should be a bullish transitional bar there. And then this should be this should be a bearish, and this guy should be a bullish. And this guy in here should be a bearish. When you get a little shake and bake of bear, bull, bear, it's probably a higher probability trade. Why? I'm going to tell you why. And now I don't have any math to back it up. I'm just going off of, usually get people chopped up in here when it goes back and forth, including someone like myself, if I'm not trading well. Therefore, you miss the good trade. You get chopped up in this trade, and you miss the real move in the real trade. So when you get this left, right, when I mean left, right, I mean up, down. It's like short, long. I should be short, not going to sell it because I just got chopped up, and then it goes. Does that make sense? That's the sequence in here. It's amazing how you come up with things when you're looking at pictures of charts on your phone on the beach. Even when I'm relaxing on the beach, I'm looking at charts for us, as well as a pair of binoculars with sunglasses. So let's go through this again. Not through that one again. Let's go over here because we had another right, left, right in here. This was slightly bearish. This was bullish. This was bearish coming down, and there was opportunity in this one to sell it. It wasn't great follow through and eventually jump back up, but that was a nice sequence in here. And this is the overnight trade. Obviously, this is just the first half of today's session that you could review. But you see what you learned just from a review of knowing when what these damn things mean? You ever see those bars that people have that if it's green, it's not candlesticks because those go green and red just on the open close of the bar. But they might have some color stuff down in here, or they might have whatever. they have something that says, okay, when this is green, you should be a buyer, and then if it's below that line, you should be a seller. Not stochastics, it's just color code. It's to get people to think that it's easy to make decisions. So if it's like below that line, it's red, and if it's above it, it's green, and you should be a buyer, and then it shows. Well, nothing's that easy. But I could tell you for sure, not for sure, but I could tell you that the probability, and you get a lot more usefulness on if you're good with transitional moments of short-term traders and how they're following them and how they're potentially getting chopped up because it went bearish, bullish, bearish in a pretty small time frame. 20 minutes is a pretty narrow time frame when it's slow. 20 minutes when the market's moving fast, it's not. But when the market's moving slow, 20 minutes is a narrow time frame. So the point is that this would have higher probability of working the long up-down pattern to create this because you had this guy in here jumbling things up.
Seeing a report out of German press that Munich is considering banning.
But you have to, there are wrong transitional bars that you could put in. But not if you know what you're kind of talking about and get good at that. I mean, this one should be a bearish transitional bar based on this analysis. I mean, this essentially is how I run the trading room. I'm thinking out loud. But I have the visual capability of just thinking, who's in control and what should happen, and then I know what shouldn't happen because I know what should happen. This visual is going to give you guys, I think, a real powerful way to follow the market better. If you follow it better, you'll trade it better because you'll be more confident. Does that make sense? And then you'll see some patterns that are the real patterns you should be able to get confident with because the dynamic of why it's a pattern is understood. And it's about most people are not going to catch a move lower. That's why the son of a gun moved lower. I'll say it again. Most traders are not going to catch a move lower. That's one of the reasons why it moved lower. If everybody was short, then everyone's trying to buy it. It's not going to move lower. Or it's going to be harder to move lower. But if there isn't a lot of people short, there isn't a lot of buyers, it's easier to move lower. Does that make sense? So you've got, this is, again, it's not another transitional moment up because we never had really a bearish moment down. So it just stays bullish. Another value for this is that you could fade all day long, and there's nothing wrong with having a fading strategy, but at least know that you are fading and keep a shorter leash on it. The whole thing with fading trades is, in the context of how quick the market's moving, is when you're fading, you're going to want those to move sooner rather than later. You want to have less patience, in other words, with trades that you're fading with, meaning you're selling a rally to get short or you're buying a break to get long. There's nothing wrong with that, but you're going to want them to work sooner rather than later because you're against the grain. You don't want the herd to stay strong and run you over. Hope you guys like this session. I'm going to stop the recording